We are doing the role of the P&C Treasurer, hints and tips. It's around about 46 slides. Some of those slides I'll go through in less than 10 seconds, and some will take a little bit longer than that. We're looking at around about an hour for tonight. And if we've got extended questions, it might go a little bit longer than that. But I guess the number one rule of P&Cs is make sure you start on time, make sure you finish on time, because you're always dealing with volunteers. Okay, just a couple of more people have come in. We have Ash, and she is from West Bustleton. Excellent. Another person from out of the Perth metro area. Awesome. Okay, so WAXO, we partner with P&Cs to advance public education. That's our job. It's great alliteration. It's also exactly what we do. We partner and we empower P&Cs. And this year we have been around for 100 years. First formed in 1921. It's 2021. This is our 100th anniversary. Our conference this year that we always have in August will probably be our biggest ever, I imagine. If you get a chance to get along with that, please make sure you do. If you have any problems with this tonight, just log out of Chrome. Always use Chrome. Go to the link of the email that I originally sent you and click it again and open again in a new Chrome window. All our webinars are put on our YouTube page, so that's WAXO since 1921. And the great thing about the webinars that are up there is they have contents, or they're indexed, which means that you can go to any cue point and go and find exactly what topic you're looking for. It makes it really, really easy. You will just notice that I have drawn on the screen there, and I tend to do that a lot. So when I'm highlighting points, I will be drawing all over the screen. Couple of great resources for you. The P&C Treasurer's Guide, that's an obvious one for the Treasurer. Make sure that any document you use has got updated for the 2019 P&C Constitution on it. If you find anything else than that, please recycle it or dispose of it. And also our 2021 P&C Handbook has got lots of great information in it as well. We send one copy out to schools, but you can download it from our website in PDF format, which is, for me, it's my preferred format because it's easy to search through. Makes it, easy to do. On our website, we have some sample and the interactive samples of Treasurer's reports and how they should be presented. So they would be very handy for you and also the people within your P&C. And launched this week our P&C Finances e-learning project, which consists, it's a P&C Finances course, which consists of around about 7 modules and should probably take you no more than 60 minutes to do. They're quite short modules, and they're not just aimed at the Treasurer of the P&C. They are written at a level to be aimed at everybody in the P&C, to bring everybody up to date with P&C finances and therefore enhance the financial governance within your P&C. You will find links to that on our website, also on our Facebook page. The first post of that was our Facebook page tonight. So we hope you make use of that really, really great resource. It did take us quite a while to develop. Okay. Rathi has asked, should we be seeing something on the screen? Yes, you should be seeing something on the screen. Are people seeing things on the screen? Can I just ask that question? If you're seeing something on the screen, please let me know. Yeah, okay, so people are seeing things. Okay, good. All right, not seeing things, but seeing what you should be seeing is the best way to put it. All right, thanks. Rathi, I would ask you to please log out and then, close the window down and go back to the link in the email and open it up again. I am recording tonight, so if things happen and things break down for you, remember that I am recording. All right, and I will send you a link to that recording, and I will also send out the slides from tonight as well. Okay. But sorry, it's just checking something out there. All right, so what we're going to cover tonight is statutory and constitutional responsibilities, financial management of the P&C as well, the Treasurer's report, and financial protection of the P&C. We are not going through bookkeeping or accounting skills. I have to assume that you have some level of bookkeeping or accounting skills, or you know how to use Excel, you're familiar with that, or you know how to, if you do it by hand, you know how to use Ledger, or you use Xero or some type of accounting platform like that. So we won't be going that deep into the role tonight. Any type of question, I usually have questions in the midpoint or at the end, but because we have 11 people on board tonight, which is not a big crew, just ask questions anytime in the chat function. I will bring them up once I've viewed them, so everybody will be able to see them. Okay. With any of these office bearer roles, it's always about the role. Sorry, it's not about the role, it's always about the goal. And the goal is always for the children of the school, your children, everybody else's children within the school as well. That's what being on part of a P&C is about. That's what we're aiming to do. And sometimes, unfortunately, things go into being about ego, and it's being about power and being about politics. And that happens a lot, no matter what type of organization you're in. And sometimes you drift into that area, but always keep focused about what it's about. And it's about that goal. And the goal is about the school. The goal is about the kids at the school. Okay, so the role of the Treasurer, statutory and constitutional responsibilities. So that basically means legal responsibilities, and that is responsibilities under your constitution. Now, the P&C, your P&C has a constitution which was rewritten in 2019, so it's a brand new constitution. And in that constitution, it also refers to legal obligations. So the two are very close. Just before I go too much into that, always remember this one word, transparency. With everything you do, there is an exception, but with everything else you do, you should be transparent in your actions, particularly, and this is really important for the Treasurer, because you are the person dealing with the P&C's money. So always transparent with whatever you do. There will be times where you can't be, and that will generally be when you are dealing with P&C employees, because you have an obligation to keep information about them private and confidential. You have a legal obligation to that, but everything else should be transparent to the members of your P&C. A question has just come up from Dean. Should the Constitution be signed? I'm not quite sure what you mean by that. Your Constitution was adopted by your P&C at some point in the past, maybe in the last 18 months. And once it was adopted, it came through to us, and we put it through to DEMAs and Department of Mines, Industry Regulation and Safety. They ticked it off. It became your legally binding document then. So from that point on, it doesn't need to be signed. But if you could explain that a little bit more, maybe I'll be able to answer that question better, Dean. All right, so your school, Dean, is just trying to find out what your school is, going back up. I think it's Sorrento. So I think there's around about 5 schools or P&Cs that haven't actually adopted the new constitution. So the good probability or possibility that yours has adopted it, which means that you should be working from the 2019 P&C constitution. Okay. One of the first things you need to do as a Treasurer is make sure that your registrations and updates are happening with government organisations, all right? And you do have to do some reporting to government organisations. So first of all, the Australian Taxation Office, you will need to update your annual contacts with the Taxation Office. Now, this may not directly be part of the job of the Treasurer. In most P&Cs, it's part of the Secretary's role, but please make sure that the Secretary is onto it. Because if these are not updated and you get 3 or 4 years down the track and they haven't been updated, the ATO is really strict about your access to information, and you may actually have to go and hunt down past office bearers. And I know that some P&Cs have been through that, and it's really painful. So please make sure that those contacts are updated every single year. Now, if you're registered with the ACNC, which is the Australian Charities and Not-for-Profit Commission, you will need to do an annual information statement, which is basic information about your activities and your revenue for the financial year. That is if you're registered with the ACNC. Not all P&Cs are, but most P&Cs are. Every P&C will need to do an annual information statement for associations online because you're an incorporated association. Now, as of around about September last year, those P&Cs that put their annual information statement to the ACNC will not need to repeat it with associations online, because those two organisations now talk to each other and they share information, all right, which is great because it saves you a little bit of time. And that will need to be done after the end of your financial year. So when your financial year ends, you've got around about 4 to 6 months to do that and to get those that information in. And it's not too onerous. It's not a huge amount of information. And if you're up to date with all your finances, it should be quite easy. Of course, WAXO requires a copy of your approved financial statements as well, or if you have an audit or if you have a review, we will require a copy of that as well, and that needs to be done by the 30th of April. Okay, so they are your updates you need to give and information statements that you need to make sure that you update with government organisations and WAXO as well. Earlier I mentioned the Treasurer's Guide, and if you go right to the back of the Treasurer's Guide, the last couple of pages, you have this fold out here. And in this fold out, you will see a table for annual financial reporting. So all your requirements for financial reporting, and we've laid all that out for you. On one side is the P&C that is not registered with the ACNC. And on the other side is the P&C that is registered with the ACNC. So if you want to know exactly what your reporting is, you just read down here and it will tell you exactly how you have to report. All right, and that is to your annual general meeting and reporting to general meetings as well as to government organisations and to us. All right, it lays it all out for you right there. Okay, now, two types of accounting methods really, cash or accrual accounting, and you may be familiar with them or you may not be familiar with them. If you are under $250,000 in annual revenue, which will be most P&Cs, there's not many that go over $250,000 in revenue, and revenue basically is all your income. So it's not profit, it's all the money that comes into your P&C. So if you have a canteen, you're at a high school and you have a canteen where the kids come in and they're buying lots and lots of food and you're open 5 days a week and you've got a few employees, the chances are you might actually get very close or even over $250,000. But most P&Cs will generally be under $250,000. If you're under $250,000, you can choose whether to use cash accounting or accrual accounting. You've got a choice. If you are over 250,000, you don't have a choice. You must use accrual basis accounting. All right. So under 250,000, choice. Over, no choice. It's going to be accrual. And that accrual based accounting must be in accordance with the Australian accounting standards as well. So basically the difference between cash or accrual comes down to the time that a transaction is recorded. So the best way to put it is, if you've got a canteen, let's say you've got a canteen and you've got a drink supplier for the canteen, and that might be Browns, and they bring in your flavored milks and your yogurts and things like that. And they do a delivery and it's $1,000. And so you get an invoice from Browns for $1,000. Now, for accrual based accounting, you will record that money as being spent the minute that you actually receive that invoice. You may not have spent the money yet, but in your mind and in your system, that money's already spent, so you can't use it. Whereas cash-based accounting, you don't actually record that money as being spent until the time you actually spend it or pay that invoice. So the terms on that invoice might be payment within 14 days. You might leave it the whole 14 days before you pay it, and at that point you record the money as gone. The problem with cash then is that in between that and 14 days you can spend money on this and that and that and that. By the time you get to the 14th day, you actually don't have enough left to actually pay that invoice. All right, that's an extreme example, but that's how it works. So that's why accrual is required for P&Cs over $250,000. It is seen as the more accurate way to do your accounting. And it certainly gives a better indication of your financial position at any point in time. And at WAXO, we do ask P&Cs, we recommend that you use accrual basis accounting. If you're using a platform like Xero or one of the other ones, you can actually choose cash or accrual, and it will spit out your reports exactly how they should be. And it will do the transactions exactly how they should be done. And that makes it a lot easier for you. Okay, if your overall financial reporting, if your overall revenue for a year is under $250,000, this is how you will need to report. So you've got the choice, as I said before, you've got either cash accounting or accrual accounting. If you choose cash accounting as your method, and you know that I just said that we prefer accrual, but it's completely up to you. When you do your treasurer's report, you will require a statement of receipts and payments, a balance sheet, a bank reconciliation statement, and a bank statement. Okay, I will go through these a little bit more detail later on. For accrual, you will need a profit and loss, a balance sheet, a bank reconciliation statement, and a bank statement. So you can see that these three are the same for whichever method you use, and these two are the different ones. If you're under $250,000 in revenue, your P&C is not required under law to do an audit or a review. All right, so that's the default. But the P&C may choose to actually do that. So you put it through the meeting as a motion that you are going to do an audit or a review, and the P&C decides to do that, then you must do it. But by default, you don't have to do that. That is a big change from what it was a few years ago, where you actually had to do an audit for your P&C. Now, audits are quite expensive. And when this new Associations and Corporations Act came in 2016, we couldn't compel P&Cs that were very, very small to do an audit that might cost thousands of dollars. And so we made sure that with P&Cs that they were able to actually have a choice of doing that. However, if you are over $250,000 in annual revenue, then you will need to do accrual basis accounting, and you will need to do a review. If you're over $1 million in revenue, which I don't even know any P&Cs that are over $1 million in revenue, then you'll actually have to do a full-blown audit. All right. So most P&Cs are going to fit into that under $250,000. You've got a choice of cash or accrual, and no audit or review is required, but you may choose to do one. Now, if you do choose to do one, you will actually have to get an auditor or a reviewer that is qualified or has the accreditation to be able to do this. So a review or audit must be conducted by an independent person, that is a person who's not part of the P&C. And they must be one of these, a member of the CPA, FCA, CPA, Institute of Public Accountants, or they must be a registered company auditor, or they must be approved by the Commissioner for Consumer Protection, which means you can't get any old Joe to do your audit or review. It must be a person who is permitted to do that under law. So that is what's required under law, but there's also a couple of additions under the Constitution. They cannot be a member or employee of the P&C Association. They cannot be someone who has prepared or assisted with the preparation of the financial statements. All right, so you can't be your treasurer. And they may not be a spouse or de facto partner of any of those people as well. So what it's saying is it must be someone completely independent of the P&C. Now, there are a lot of people out there that can do that. So if your P&C is under $250,000, you can choose to do an audit or review. You don't have to. I've said that a number of times. If you choose to do that, you will need to find somebody who's able to do that. If you go to our website, pncswa.org.au, that one there, I'll just make that a little bit better. And you go to Q&A number 73 on that website. We've got lots of Q&As on that website. If you go to number 73, it's actually got a link where you can do a search for someone who is qualified within your area. So that will help you out a little bit. All right. Now, sometimes what you're going to get is you'll get the school admin, or you get the principal saying, I think that the P&C should be doing an audit or a review. And it's not a bad idea. We do recommend that P&Cs do reviews if they can. However, that's not their particular choice. That is the choice of the whole P&C, whether they do it or not. Okay, so by default, you don't have to do it if you're under $250,000 in annual revenue. Now, this has been the case for around about 18 months now, but I still hear from P&Cs who have the principal come to them and say, look, where's your audit? You no longer actually have to do an audit, as I've explained, but sometimes the news or that type of news takes a long time to get down from head office of the education department down to the coalface at the school. So you don't actually have to do one if you're under $250,000. We're happy to speak to principals who say, oh, hang on, why is that? What's happened with that? We're happy to speak to them and explain it to them. Sort of a trade-off for that, though, is the fact that we, WAXO, now require you to do a solvency statement. So a solvency statement basically is expressing whether your P&C is solvent or not. You're making a declaration as an executive committee that your P&C is in fact solvent. And what that simply means is that you have enough cash and assets on hand to pay off all your debts and liabilities when they're due. If you can't do that, then you're said to be the opposite of solvent, which is insolvent. Now, the problem with an insolvent P&C is you can no longer incur any debt, which would be a real pain if you were running something like a canteen and you had to actually get more stock for your canteen. In fact, you would not be permitted to do that if you were insolvent. So it's why it's so important to make sure your P&C is solvent at all times. That is, you are able to pay off your debts and liabilities when they're due. All right. On a number of occasions over the years, P&Cs become insolvent, and it's very difficult to get out of because you have a lot of bills, you have a lot of debt, and then what ends up happening is that parents have to fundraise to pay off debt, and that's a motivation killer. Nobody wants to do that. They want to actually fundraise for the school, to give things and resources to the school and the kids. So this is a trade-off for not having to do an audit or a review. So your solvency statement will be signed at the beginning of the year by the executive committee. It will be then put forward at your annual general meeting. And you are saying to all the people at the annual general meeting, yes, we're solvent, we're fine, we're a going concern. We have got enough cash and assets on hand to pay off all our debts and liabilities, so you don't have to worry about it at this point in time. So you'll need to resolve to do that. That is, put a motion forward and resolve past that to sign it. You present it with your financial documents at your AGM. And as I said, it shows people in your P&C that you're actually solvent. And, you know, you don't have to do fundraising to pay off any debt. Please, if you get to this position and that happens, and I hope you don't, but if you do, don't hesitate to contact the WAXO office, all right? So we will be able to give you some advice and assistance on that. But the best thing to do is avoid it altogether. And the best way to avoid it altogether is make sure that your financials are up to date and accurate. Right, within your P&C, you do have subcommittees, and you as a treasurer have responsibility for those subcommittees. So Even though your subcommittee may have a subcommittee treasurer, you are the overall treasurer for all subcommittees and everything the P&C does, and you are responsible for all the money within the P&C, all the finances. You will have access to the bank accounts of the subcommittees, and you will be a signatory to the bank accounts of the subcommittees. Please don't let your subcommittees have separate signatories if they have a bank account, all right? That's not what should be happening. The same signatories for all your accounts should be the people that are the office bearers of your P&C, all right? So make sure also that the surplus funds are transferred to the main account as well. So there shouldn't be really any surplus funds sitting in the subcommittee account apart from contingency funds for things that they need to spend money on. Any type of surplus should be transferred to the main P&C account. And as I said, subcommittees must always be under the P&C control. That's really important. Sometimes we do see subcommittees that tend to get a little bit out of hand and don't want to have anything to do with the P&C and want to operate on their own. And that's fine, but they can't be a subcommittee of the P&C. They can go their own way and do their own thing. And I've seen that over a few years. Probably the biggest culprits are band subcommittees. They tend to have quite a bit of money and they tend to have quite a few members. But if they want to be a P&C subcommittee and get the resources and the insurance that the P&C has and the access to the funds, they need to be under P&C control. Right? And they need to have this document, which is called a Terms of Reference. And there are templates for this on the WAXO website, which is this one here. You don't have to rewrite them. You can edit these. They're in Word format. Download the template and change it how you like, as long as you don't contradict the Constitution, of course. So that is the Terms of Reference. Please make sure that every subcommittee that you have has one of those. Okay, on to record keeping. Make sure that your records are always kept in a very, very safe place. All your records, your financial records, need to be kept 7 years from the date of the last transaction on that record. All right, so bank statements for 7 years, any other financial record for 7 years. If you've got employment records, that must be 7 years after the employment ends, as well as the time that you have that employee there. So, you know, if you've had an employee there for a few years, you're going to have records dating back a long, long time. All right. So pretty much if you keep the figure 7 in mind for your financial records, you're going to be fairly right with that. You're also responsible for keeping up to date with awards and legislation which govern employees, industrial instruments. There might be industrial agreements and that. You'll need to be up to date with them as well. Please make sure that you ensure privacy for your employees. I stated that at the beginning. I was talking about transparency, but within transparency, also you must make sure that you obey the law and you make sure that there's confidentiality when it comes to your employees. Superannuation, of course, there is a standard that is called SuperStream, and small P&Cs or small organisations like P&Cs with under 19 employees can actually use a small business superannuation clearinghouse, which is free for the payment of superannuation. So while SuperStream is the standard, this is actually how it's done. And for more information on that, I will send these slides out to you, and you actually go to that website address there, and you go through your business portal, which your P&C should have. And that will allow you to access or register for the Small Business Superannuation Clearinghouse, which is great because it's free for small businesses like P&Cs. I haven't seen any questions come up yet, so please make sure if you've got a question, put it up. Happy to answer it. All right, so the second role of the P&C Treasurer is the financial management of the P&C. Now, this is something that your whole executive committee, to start with, should be involved with. P&C should be looking at budgeting. And really, it should start towards the end of the financial year, which for most P&Cs will be at the end of the school year, close to the end of the school year. And sometimes I realise that's a bit hard because everybody's had it with the year. everybody's exhausted. We're getting into summer, we're starting to get outdoors. You know, the fun months have begun, and the school's coming to an end, and the kids are all excited because the school holidays are coming up. It's not a bad time, though, to actually start thinking about what your budget's going to be for next year. And for most P&Cs, a budget will be very similar from year to year. And that's because you generally have the same businesses, you do the same fundraising, you generally have the same income and expenditure, and that actually makes it really easy for you to do some budgeting. Make sure you've got a wish list too from the school. So put the pressure on, ask the principal, and that will help them with their own budgeting as well. What would your school like to see us fund for next year? And once you do that, you can then be organised and work out an activities calendar. So each fundraising event you do has a goal. This time we're running this colour run because we want to raise money for such and such for the school. So once you've got a wish list, it can actually lead to an activities calendar. And with all these things, make sure they're flexible, but always allow a buffer as well. Okay. Sometimes things cost more than you anticipate. So if you are putting forward a motion or for expenditure, you might want to add on 10, 20% just to cover contingency things that you didn't count on when you did your original pricing. And please don't forget employee entitlements, because while all these things are fun, this is actually a legal obligation. And that is why it's really, really important. And over the years, I've seen P&Cs get into trouble because they haven't actually given correct entitlements to their employees. And because P&Cs change each year, the executive changes, the president can change as well each year. Basically, your employees have a different boss every year. And sometimes things can get lost and mixed up. Please make sure that you're really, really up to date with those entitlements for your employees. Look after the employees. I do have a question that has come up. Thanks, Dean. Dean's just mentioned that single touch payroll as well. And that is, good. So single touch payroll basically means that most systems these days, so most software platforms allow you to basically report with your superannuation and make sure that it actually meets the SuperStream standard as well. All right, notice of financial motions. Under the Constitution, under the new Constitution, a financial motion given to a P&C the P&C must now be given notice of it. So it can't actually be raised at a meeting and passed at the same meeting. So it must be raised beforehand. The P&C must be given notice of it, and then at the meeting it can be passed or carried. So 7 days for a general meeting and 48 hours for an executive committee meeting. That means that the P&C must be given notice of that financial motion. And it doesn't have to be in the form of the motion, but it might be in the form of when you give a notice for the meeting, 7 days before the meeting, which is what you're required to do. On that notice of meeting, you are saying, at this meeting, we're going to look at spending $5,000 on shade sales. All right, something as simple as that. So the meeting's got a heads up that there is going to be money on the table to be spent, and they're going to have to make a decision on that. Please, please don't bend it, because once you bend that, it becomes a little bit of a slippery slope after that, and then it becomes 5 days and 4 days and 3 days. Don't bend it. Don't bend it for anyone. Unfortunately, sometimes I've heard people, principals of schools say, oh, look, you know, the Constitution, it's only a set of recommendations. It's not. It's your governing document, and you're incorporated because of it. You couldn't be incorporated without a Constitution. So it makes it a really important document. And that is one of the rules that is within the Constitution. And the other thing you can do too is make sure that with your financial motions at the beginning of the year, to make life easier for you, make sure that you have subcommittee and treasurer spending permissions at the start of the year. It's like motions at the start of the year. And this is what I mean by that. So if you've got a subcommittee, you'll have a terms of reference. So in that terms of reference, one of the rules in that terms of reference could be something like this. The subcommittee has the power to spend up to $100 per term on consumable items directly aligned with the operations of the subcommittee after confirmation from the P&C Treasurer that such funds are available. Some points from that. You've got an up to amount, which is good, okay? Per term, so you've got a time limit on it, and you've also got a restriction on what it can actually be spent on. So this is quite a tight motion. And of course, we're going to make sure that we have confirmation for the P&C Treasurer that such funds are available as well. So that is for your subcommittee terms of reference. Now that will make their life a little bit easier because they don't have to always come back to the P&C and say, look, can we have money to spend on this? They've got a little bit of money each term to spend. Now that figure there, $100, is our suggestion. All right, it's not in the Constitution, it is just our suggestion. Now, a motion for the AGM could be something like this: that the Treasurer and President, as dual signatories, have delegated authority to spend up to $200 per term on unanticipated expenses until the 2022 AGM, etc., etc. Once again, up to, it's got an amount, tells you what for, and it's actually basically got an end date on it as well. So you would pass this every single year. So this would be presented at your AGM, and that would cover you for the whole year. And once again, that gives you flexibility with your spending. So you don't always actually have to come back. So if you're doing a Bunnings sausage sizzle and you run out of sausages at 3 p.m, you can go down the local butcher or Coles or Woolies and you can go buy those things, even though it may not have been, you may not have anticipated it when you initially put out the money to spend on that particular event. That gives you a bit more flexibility and freedom. Question has come up from Dan. Thanks, Dan. I didn't introduce you at the beginning. Sorry about that. Are all subcommittee terms of reference to be voted in each year, or do they stand year to year unless changes are proposed? You've passed them right at the beginning of the year. So you do that every single year, as well as actually electing people to the subcommittee. So let's put it this way: the subcommittee and its terms of reference are refreshed every single year. Dan's from Beaumaris. Thank you, Dan. With your financial motions at your P&C, once you pass a motion, it becomes what's called a resolution. And it's a good idea that within the minutes and the reporting that you talk to the secretary and they get into a little bit of a habit at numbering financial motions within the minutes. And that means that when you actually do your reporting, you can use a motion number, such as FR52-2019. The way you do it is completely up to you. But this is, as an example here, that the P&C spends $500 on consumables for the Democracy Sausage Sizzle. So this is the 5th financial resolution of 2019 approved at the 2nd meeting of the year. And that's what that code means. That's our recommended code. That's actually the way that WAXO State Council run their financial motions and the resolution number. It's a good way to track through the system. So every time that, even in your cash book, you actually are including that resolution number. So everybody knows exactly where that decision to spend that money came from. Question has come up from Ashley. Can we do financial motions at the next or following meeting if AGM has already been held? Yes, you can do it at any general meeting. Thank you, Ashley. Yep, no problem. All right, so on to receiving money. There's a variety of ways you can actually receive money. So obviously you've got cash, you've got check, might be FPOS, might be a direct deposit into the bank as well. And some P&Cs these days are obviously using FPOS. They're using things like Tyro as well, which is an FPOS payment as well. So, and not so much Square these days, as in Square readers. I know there's a lot of push for P&Cs to actually be able to get to Square readers and use Square readers, but Square itself, the company, is They're reviewing this, but they're a little bit reluctant to use actually give square readers to incorporated associations now. But I believe they're reviewing that. But there are other options such as Tyro. But the point is that there are a variety of ways that you can actually use or actually receive money. Make sure you always issue receipts. And with a receipt book, make sure you've only got one receipt book for your P&C. Now, sometimes you can't, with common sense, you can't issue a receipt. If you're doing a sausage sizzle at Bunnings, you are not going to give a receipt out at that point. That makes sense. I mean, common sense prevails. Treasurer keeps all receipts and the book as well. And please make sure that, and this is under the Constitution, that at the end of an event, when you are counting and signing off with counting money, you count it with another member. You both come to an agreement of what the number is. You both sign off on it, and then the treasurer or the delegated person will do the banking. So it's very important that the count is actually done by two people, and the two people sign off on exactly the same amount. It doesn't matter who that second person is, but the first person under the Constitution has to be the treasurer. Once again, that can be delegated, but if you are going to delegate that, it must be put through as a motion at a meeting. That authority to do that as the first person to count must be put through as a motion that you've delegated that to another person to do. And we would prefer that the other person to do it, that to lead the count would be another office bearer of the P&C. And that's the case because sometimes you just can't make every single event, other stuff to do. All right, but please make sure you're prepared for that and you've delegated that authority to somebody else. All right, when you get money, please make sure that you bank as soon as possible. Try to avoid keeping it overnight if you can. A lot of P&Cs, especially ones that run canteens, will have safes, and that safe will be located within that canteen area. So if you really have to, it may go into that. Do not use the school safe, all right? And they actually shouldn't be letting you do that. So don't use the school safe. And if you must, a good idea to actually get money insurance. All right. So money insurance is an optional insurance, and you can get it through an insurance broker. The insurance broker, which is Grange Insurance, that provides your public liability and volunteer accident insurance. Through us, they provide money insurance as well, which is basically insuring your money until the next day that you can actually do banking, that the banks are open. Don't, this last one here, and I know some P&Cs do get into this habit, please make sure that you bank money first and then make payments rather than receiving cash and putting cash straight out again. That might seem like a little bit of a no-brainer, but it can actually create an accounting nightmare if you practice doing that. So please make sure that all money is banked and then payments are made from that bank account. Right, so paying accounts. You've got a couple of ways you can do that. So check, obviously, and electronic funds transfer as well, and to a lesser extent, petty cash as well. All right, but there's also now debit cards, and I will go through that very soon. And that's just new in the last, well, I would say in the last 6 months or so, the debit cards for P&Cs. Please make sure that any authorizing transaction is 2 to sign. It's always 2 to sign, and it can only be these people. These are your 4 mandatory signatories, and that is their role under the P&C Constitution. But you can also have a 5th, which is this one, and that's entirely optional. So that's another executive committee member who is voted in at the AGM or another general meeting to be the 5th signatory. While those 4 are mandatory, this one is optional. You don't have to have that one, but you have those ones as default under the Constitution. If your authorized signatories are in a direct relationship, which happens a lot, and a direct relationship can be a marriage, de facto, family relationship, a business relationship, they are not permitted to co-sign. All right. An example of a business relationship, one that popped up last week, is a P&C. A couple of their office bearers were teachers at the school. All right. So basically, even though the kids were at the school, they also have a business relationship for both being employees of the Department of Education. So they wouldn't be able to co-sign. This is especially relevant in small country towns where you have a lot of people that are actually related. So big families in those country towns, and they have to be very careful with this as well. So it means that if you're in a direct relationship with someone else, you can't actually sign with them. You have to sign with somebody else who is an authorised signatory. Generally, the first signatory, because they're the person that looks after the P&C finances, will be the treasurer. And it's a good idea to rotate. So the first one is one transaction is the treasurer and the president. The next transaction, the authorised signatories, is the treasurer and the secretary, and so on, and rotate that second signatory. So P&Cs can now use debit cards, and look, to be truthful, we know that P&Cs were using debit cards way before we passed it out at our state council meeting that they could do this. We knew that it was already happening, and so we wanted to provide some safeguards for them because we knew it was going on anyway. So how do you resolve to actually use a debit card? Well, you actually must put it through a meeting. It's a good idea to do this at the AGM. So number one would be that a debit card account be opened and be called the P&C Association debit card account. And number two, that the debit card and account usage policy dated such date, adopted for the year. And you do this one every single year. So you adopt this second one every single year, and that the signatories to the account are, and that will change every year, of course, because your office bearers will probably change. So while the first one is done once, this one is done every single year at your AGM. And some of the features of your debit card's terms of use would be things like this. And this is our recommendation. And there is a document on our website, this one here, which is called Debit Card Resource, in terms of actually, will give you the terms of operation. We'll also talk about the motions that you need to pass, basically what we've just covered. You can download that from our website. It's also in the P&C handbook each year. So some of these terms of operations here, and some of them are fairly obvious. The second one here, the debit card will be used under the terms and conditions of the bank that issues it. That pretty much overarches everything, because really, if you use your debit card wrong, the bank may not honour a transaction. Okay, so although we've got these in our terms of use, this one here is probably the most important one, that you use it under the terms of conditions as assigned by the bank. We also recommend that debit cards are not to be used to withdraw cash from ATM or using FPOS cash out facilities, which is a bit of a no-brainer. That the maximum balance on the debit card is to be $500. That is flexible for your P&C. That is our recommended amount. So there is a number of different terms of use for your debit card to restrict how the debit card is actually used. All right. So that's like a summarized list. There is a few more points on the resource that you can download from our website, and is in the P&C handbook as well. Now, maybe now that P&Cs have debit cards, they are going to move away a little bit from using petty cash, and probably petty cash use should be kept to a minimum. Please make sure that you use petty cash vouchers from payments for payments from your petty cash as well. And it's a good idea to have resolutions that you pass at your AGM that will actually cover the use of petty cash. And there's three that we think are a good idea. One, that amount of funds in petty cash be set at a maximum of $50. So there's only $50 as a maximum in that petty cash tin at any one time. That's good. That the limit on payments from petty cash be set at a maximum of $10 per day per individual, and be restricted to inconsumable items that align with the core objects of the P&C only. That's really tight as well. And that petty cash be in the possession of the P&C Treasurer, who has the authority to sign for release of funds. It's limiting its use, it's restricting its use, it's making sure that things are done right, and that you're actually keeping count of what is going on with your petty cash as well. And that also applies to your event floats. So not just your petty cash, but your event floats. So event floats, a motion for an event float will be very, very similar to these. And recording your receipts and payments, recording what's going in and what's going out, can basically be done in something like a cash book. All right. So if you're using advanced software, using something like Xero, it's going to look a little bit different than this here. But the thing I want to point here is the actual resolution number. So those transactions that come from resolutions of the P&C are noted. And it means that they can be tracked. So the transactions can be tracked from the resolution. We know which meeting it's been passed at, and we can track every single transaction from that point. All right. If you need to do an audit or something like that, that makes life a lot easier as well. Okay, on to the Treasurer's report. Okay. Now, you will have reports at meetings. You'll have lots of reports, but the most important report, and the principal's report's great, the president's report's great, but the most important one is the Treasurer's report, because it's accountability for the P&C's funds and the hard work people have put into the P&C to actually earn those funds. All right. So the Treasurer's report, it should be in writing, given out in writing prior to the meeting. So when your secretary sends out the documents, the agenda and things before the meeting, the Treasurer's report should be attached to that as well. It should be delivered verbally. So even if you're pressed for time and you can't do the principal's report or the president's report, this one still needs to be done. It needs to be presented at every general meeting of your P&C. So your P&C will have is required to have at least one general meeting per term. Most P&Cs have around about 2 per term. That is one every single month. And at each one of those, there will need to be a Treasurer's report that is presented. And please make sure that you invite questions from people. That increases transparency as well. So when I say delivered verbally, I mean standing up and actually delivering a summary of your report, not reading out each transaction as it happened, but delivering a summary of the report and then inviting questions from people who are in attendance. Okay, so parts of that report. First part of the report, the first ones I'm going to refer to are required whether it's cash or accrual or basis accounting that you use. All right. So you need bank statements. And if you've got 3 bank accounts, you will need 3 bank statements. If you have employees and there is something on there that is relating to an employee, then you'll need to redact it from the document. Put a line through it. All right. So you're making your best attempt to actually ensure the privacy of that employee of the association. That's the first document or part of the report. Second one is a bank reconciliation statement, and doesn't matter whether you're using cash or accrual, you will require this as well. A bank reconciliation statement basically looks at the difference between what's actually in the bank and, what's on the bank statement and what actually is in your cash book. And generally that's a time difference between different things. So for example, there might be checks that actually haven't cleared yet, or there might be deposits, hopefully not too many and not too big, that actually haven't been deposited yet into the bank. So they're not actually showing on the bank statement, but you know they are there and they're in the cash book. So this is explaining really what's the difference between what's in the bank and what's showing in the cash book. And at the end, they should both be equal and balanced. You will require that for each bank account that you have. Whether you are using cash or accrual, you will need to produce a balance sheet. And a balance sheet basically looks at the current assets you have, and that might be stock, it might be cash, it might be property, it might be plant and equipment. They are current assets, so it's cash or other assets as well. And what your liabilities are, what money that you actually owe. And that might be current liabilities, which are ones that you owe very soon, or what's called non-current, which is ones that you will owe in the longer term, maybe over 12 months or so. And once you have current assets and current liabilities, you will basically get what is called net assets. And hopefully that is always in the green and in the positive territory. And generally, your balance sheet should show what happened last year. All right, so for your total of your last financial year. The previous month as well, so the closing balance up to the previous month, and then the final balance as well. Okay, I've got them back to front, sorry. I was thinking of the other one. So that is the previous year's final balance, and then the closing balance of the previous month and the closing balance of the current month as well. All right, detailed there in your balance sheet. Okay, your statement of receipts and payments is for cash. So if you're doing accrual, you don't use this one. This is for cash accounting. So this basically breaks down what receipts you have, that is pretty much the money that has come in, and the payments, the money that is going out. And it summarizes them in terms of categories. And you can compare this from month, from the year, or up to the year, or the year to date, and for the last year as well. And it gives you a good indication of how you're actually going. So it breaks it down into sales from your canteen and your uniform shop, your fundraising, and it breaks it down into each fundraising activity as well. So you can see what's happened in the year and the years past as well. And it does the same for payments as well. We'll go back to balance sheet here, just returning to this. When you, with most associations and businesses, this will usually be the first sheet that people actually look at, is the balance sheet, because it gives a good indication of your financial position at any point in time. So your statements of receipts and payments is for cash. Now, the equivalent for that, for accrual, is called a profit and loss. All right, and it is quite similar. It's formatted a little bit differently. It looks at your income, your total income, and then the cost of sales, which is basically the money that you had to spend to get that income. So, for example, you might have income from the canteen, but you had to buy stock for the canteen, and that is what's called cost of sales. And then, of course, you've got all your expenses as well. All right. And you may even go as far into your expenses as depreciation as well, if you've got a lot of plant and equipment. And at the end, you'll then have a net profit and loss, and that's got to be in the green. So that's got to be in the positive for your P&C. Now, that is required only for accrual basis accounting, and it must meet the Australian accounting standard as well. And the last section here is financial protection of your P&C. Please don't take shortcuts with your controls with your P&C and your finances. Please make sure that everything is done well and is explained well, and that you're very, and I'll go back to that word again, transparent with your P&C about your P&C's finances. Please make sure that you're only using authorized signatories. Now, it tells you in your constitution who your authorized signatories are, and change them as soon as possible. Over the years, I know, working for Waxo for 7 years, there has significant amounts of money that have gone missing from P&Cs. Significant amounts, you know, and one occasion was over $100,000. All right, but they don't go missing. That money doesn't go missing in 1 year. It goes missing over a period of years because the finances are not, the reporting is not done correctly. Okay, and it also goes missing because signatories are not changed on time. As soon as your signatories change, you change them at the bank as soon as you possibly can, immediately, basically. I know sometimes banks can be a little bit tardy, and they're not very, some of them are not very helpful, and they say, oh, you need to come back with this document and this document. Have a chat with them. Make sure that when you turn up that you've got all the right documents so things can be done as quick as it possibly can. Secure all cash if possible, all right? Get that done. Audit your petty cash regularly. Never sign blank checks. That's a no-brainer, but it happens, unfortunately. And please make sure that your treasurer's reports are done properly. And if you're not a treasurer of a P&C, that you are asking or demanding of the treasurer that they actually be done properly, because they need to meet a certain format under legislation under the Associations and Corporations Act. So early red flags that are issues, things that are going on within your finances. And of course, you've got scams and all that. Please don't fall for scams by emails and that. Some very clever ones that go around where they actually go to school websites or P&C websites. They pick up the names of people and the email addresses. And we've had a number of reports of this year already. And they send an invoice from someone to someone from the P&C. Sorry, they send a request from someone like the president of the P&C to the treasurer of the P&C saying, can you please pay me this money? Because they picked up people's names. People rarely fall for them, but yeah, just be aware that those types of things can happen. So some early signs of issues are poor treasurer's reports, not done properly at all. Yeah, I've been to a P&C meeting as working for WAXO where the treasurer's report was an ATM statement, little bit of paper that comes out of the ATM. Okay, that's not what we're actually looking for, of course. Bank deposits of unknown origin or money not being banked on time or at all. Generally, bank deposits of unknown origin are an indication that someone is paying money back because they have removed it from the P&C. That happens from some of these cases quite a bit. Payees signing own checks. All right. Even if you have a legitimate reimbursement to you as a person who spent money for the P&C, please don't sign that transaction that pays you back. Don't be an authorized signatory on that. Get other people to do it. Transfers to personal or unknown accounts as well. And you will be able to pick that up if you actually have proper treasurer's reports and you have the bank statements there, and people will be able to pick those things up. Or a decline in profits. Sudden or unexpected decline in profits may be an indicator that things are happening within the P&C as well. All right. Please protect your finances. Money does go missing. Not-for-profits are generally targeted, and they can be targeted pretty much because they're run by volunteers, okay? So please make sure that you are looking after the finances of your P&C, because that is the hard work that people have put in to raise money for the kids at the school.